afternoon. Time to check in on the markets. Global markets weaker amid macroeconomic concerns. It's basically the market having a tug of war between investors who are seeing opportunities and those investors who are concerned about the difficult economic backdrop. We're also seeing U.S. yields having an impact on the currency market, with the Japanese yen weakening to fresh 32-year lows. It's 13 straight sessions of declines, and analysts are saying that U.S. bond traders are increasingly pricing in a more aggressive Fed policy, which is not only pushing up yields, but it's also driving up the U.S. dollar. But to talk to us about what we can expect going into earnings season as we continue with it, but also look back at the week that was, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. A couple of hours ago, you look at the JSE that was about 1.6% lower, dragged down a little bit by the precious metals. What's fueling that sentiment that we're seeing on our local markets?
Well, Natasha, I think it's very much a case that overall the JSE has indeed been trending with commodities, and commodities are very much focused on where is growth going. Now, we've seen as far as the global markets go, or the S&P 500 certainly, and that's been down 4 of the last 5 weeks. So that's sort of indicating some concern about growth. And then, of course, the kind of upward pressure that we are seeing in those near-term U.S. interest rates obviously indicates, well, indeed, a concern that the Fed would be on quite a hawkish footing and keep that rate tightening cycle going strong. So that all in all does make for a fairly sort of cautious environment.
When you look back at the week, I mean, a lot has happened between, the UK and various other company news, etc. But what for you were the key themes for the week?
Well, it certainly was a very busy week indeed. We saw the Telkom MTN potential tie-up get kicked into touch. We saw Marcus Jooster's assets get seized. But I guess you touched on the highlight there, which was Liz Truss's government resigning in what has been the record shortest duration UK premiership ever. I guess perhaps the takeaway there is that when we look at democracies, yes, they can be quite noisy. We certainly had seen markets come off on economic policy coming from Truss's cabinet that it didn't like. But when all is said and done, that was basically a few percent here or there. Whereas when you're talking about the likes of a Vladimir Putin or a Xi Jinping, well, autocracies, when they annoy markets, they really can make for very large double-digit percentages indeed. So I think it's perhaps important to keep that kind of perspective in mind.
In my intro, I mentioned how higher U.S. yields are being felt in the currency market as well. How big of a headwind is the persistent U.S. dollar, or rather, how has it been a bit of a headwind for sort of investments, etc.?
Well, it can certainly be quite ugly in a number of ways. First of all, in the monetary scenario, a strong dollar can act like a kind of a quantitative tightening. And the reason that I say that is that remember that most global borrowing sets or bonds, as the case may be, is priced in dollars. So when they go stronger, it acts like a kind of a quantitative tightening on whoever has gone and issued that debt. I think the other point is that really anything that's priced in dollars then goes and looks weak in relative terms. So if we look at the gold price, that's down, but predominantly because of a strong dollar. Assets that are priced, for example, in euros or pounds or yen or any other currency for that matter, again, all look incredibly weak as soon as you x-ray them in dollar terms. So a strong dollar certainly has all sorts of niggling alternative outcomes.
When you look at some of the micro aspects and you include in earnings as well, is it that or the Fed that is still setting the stage at this moment?
Well, a bit of both, really. I mean, when we look at the likes of earnings generally in the States, I mean that's going to be well. So far, there's been some quite positive there, but you typically find well we're not all the way through the earnings season at all. So it varies quite a lot. I mean, when you're looking at an inflationary environment, things like retailers actually can be quite positive. And certainly banks are positive when interest rates are rising, but there's lots of other companies that could look a little bit more sticky. So that's a bit of an up in the air question at this stage.
Before I let you go, US earnings season for you so far, did we set that bar very low?
We probably did. Although I've got to say, when I look at the whole sort of cycle on how has expectations for GDP gone for quarter three, it started the earnings season at around about 2%. It trickled down quite quickly down to 0%, and it rebounded the last week or so to 3%. But there's really a lot of noise in the news, and I think markets are pricing a concern that whatever you thought last week is suddenly changing. And if nothing else, dear old Liz Truss certainly reminded us of that this week.
Warwick, let's leave it there. Thank you so much for your time. That is Warwick Lucas from Galileo Security. Of course, we will be keeping abreast of the US earnings season, as well as some of our local companies that are set to release their numbers. Of course, next week, Thursday, we've got the big ECB interest rate decision. That is it from me. We're going to take a quick break. When we come back, we'll have SME on Point with Diabo. Stay tuned.